Story of a Guizhou woman kidnapped while pregnant. Beijing bank's $720 daily transaction limit sparks heated debate. Apple suppliers exiting China faster than thought, AirPod producer. Poll: U.S. businesses do not see China as top 3 investment priority, lowest in 25 years. Consequences from CCP's zero-COVID lockdown policy, China's shipping falls into an abyss. A young woman was kidnapped and trafficked when she was 5 months pregnant more than 30 years ago. It was not until 2014 that her son managed to locate her lost family and bring her back. According to local media, Upstream News, Wang Xianghui originally came from Longli County, Guizhou Province. In 1989, she was drugged and kidnapped while walking home from a market. At the time, she had been married to a local man for 3 years and was 5 months pregnant. The traffickers sold Wang to the Guo family in Tangshan City, Hebei Province, for 4,200 yuan, $600. There, she was forced to wed a man 8 years her senior. When Wang first tried to contact her family back home, the Guo family discovered and threatened to kill her then unborn child. The woman gave up her hope of escaping after giving birth to a second child for a new family. The Guo family registered Wang with a new identity. She was then called Luo Lifan, said to be born in 1967, 5 years younger than her actual age. It was not until her first son reached his senior year in high school that he learned that he was not biologically related to the Guo family. The son, named Xiao Wu, said he never liked the family as he witnessed his mother beaten and scolded sometimes. Determined to help his mother reunite with her real family, Xiao Wu reached out online for help. In 2012, he successfully located his uncle and brought his mother back to her hometown the following year. By then, Wang's parents had passed away, her former husband had already remarried, and the entire village had disappeared. They discovered Wang's father did try to rescue Wang, but the impoverished family couldn't squeeze out enough money to afford her a trip. He also filed a report to the police, which was also futile. When interviewed by the media in 2022, Li Chengxiang, director of a police department where Wang disappeared, confirmed that they did receive a civilian report about her at the time. He, however, said it was later transferred to the human trafficking department and it was no longer his responsibility. In 2014, Xiao Wu sought help from the law enforcement in both Tangshan and Guizhou to bring his mother's traffickers to justice. However, much to their disappointment, in 2021, the police in Wang's hometown said they could not proceed with the case since the statute of limitations for prosecution had expired. Talking with Upstream News this month, Xiao Wu said he hoped the police would pursue such cases involving human traffickers. He urged them not to let such violations go unpunished. According to Apollo News, a bank in Beijing, China recently announced that customers' highest daily transaction limit was 5,000 yuan, about $728, causing heated discussions. A netizen lamented, "I can't take control of my money anymore." On February 24th, the hashtag bank with 5,000 yuan daily transaction limit appeared on Weibo. The news mentioned some banks in Beijing have set transaction limits for all accounts at 5,000 yuan per day. Applicable limits include online banking, mobile banking, instant online payments, POS machines, ATMs, and third-party payments, including Alipay and WeChat. The news sparked a fierce wave of criticism from netizens. The account Flowers Bottles of Wine commented, "My card suddenly set a limit of 2,000 yuan, about $290. Many of my colleagues also have the same situation." Jerry 0x0 said, "My Agricultural Bank of China card has only 1,000 yuan left, about $146. Even rich people don't have the opportunity to spend large amounts of money." Qingfeng Jianwu 530 lamented, "I'm sick. I can't take control of my money anymore." Beijing Business Daily reported on February 24th that China Construction Bank staff stated that there is no clear limit on over-the-counter transactions, and daily limits of 2,000 yuan, about $290, 5,000 yuan, about $728, and 10,000 yuan, about $1,455, may exist. If customers want to raise their limit, they can bring their ID and savings card to the counter to apply. In fact, since last year, banks across China have been restricting customers' online transfers and withdrawals on the grounds of anti-fraud and anti-money laundering. On May 13, 2022, a small business owner told China Business News he usually needs to be flexible with money to do business, but his China Merchants Bank debit card is limited. He can only withdraw 5,000 yuan, $728 a day. He went to the bank to request a raise in his limit. If he wanted to withdraw 1 million yuan, about $145,500 daily, he had to bring his identity card, bank card, real estate documents, and other documents for verification. Even if approved, the withdrawal transfer of 1 million yuan on the same day is still impossible. Agricultural Bank of China, Shanghai Pudong Development Bank, and other banks successively issued notices in April 2022 adjusting the daily transfer withdrawal limit for customers who don't make over-the-counter transactions to below 10,000 yuan, about $1,455, for reasons of anti-fraud and ensuring the customer's fund safety, according to Sohu. In May, Longhai Rural Commercial Bank, Fujian, announced that it would adjust the transaction limit to individual accounts that do not transfer in batches and limit the highest daily transaction limit to 1,000 yuan, about $146. Liuzhou Guangxi Bank has suspended over-the-counter transactions for small debit card accounts that have not been actively used for 6 months. Lai Jianping, master of the international law at China University of Political Science and Law, previously told Chinese media, whether it's freezing, restricting deposits and withdrawals, or clearing, this is a common phenomenon. It suggests at least government agencies at the Bank of China Regulatory Commission level are deploying and leading in a unified manner. Current affairs expert Wang Hu said, one of the CCP's goals is to control and monitor and clarify cash flow in all directions. It's also to stop money flowing out of the fund. Huang Jun, a U.S. economist, said, after the pandemic in China, the economic situation in the past years has not been ideal. The overall risk of mortgage loans and credit loans is actually very high. The financial stability of China as a whole is facing great challenges. A journalist familiar with Chinese companies and banks' operations, Huang Jingchuo, assumed that banks are afraid of being squeezed by the authorities if many people withdraw their money, so they limit withdrawals and transfers. Recently, the stop lending, cut off supply wave at unfinished buildings occurred in many parts of China, causing banks to tighten their funds. The outside world suspects banks are using bad cards and transaction limit reasons as an excuse to prevent depositors from performing routine transactions to solve their cash flow shortage problems.
AirPods maker Guizhou said Apple's suppliers are moving their production away from the Chinese market faster than expected. Deputy Chairman Kazuyoshi Yoshinaga told Bloomberg that clients have asked him the same question since last month. When can you move out? While talking about China's exit, Yoshinaga said clients have also requested Guizhou to move its production to India. He disclosed, "We get requests from our clients almost every month. Do you have any plans to expand to India?" Guizhou is making Apple's regular AirPods, after losing a contract to make the AirPod Pro. The company is focusing on building its production facilities in northern Vietnam. It's expected to begin making virtual reality headsets in the country in 2024. Yoshinaga, who oversees operations at the company's headquarters in Hanoi, hopes the Southeast Asian country will be responsible for more than half of Guizhou's global sales in 3 years, up from 1/3 presently. Apple has been tight-lipped on its China dependency and evaded answering if it may seek to reduce investment. Besides the pain left by Beijing's zero-COVID era, the electronics industry has carefully reviewed its reliance on China, as the US-China hostilities show no sign of thawing. The U.S. Commerce Department on February 28th announced that chipmakers receiving U.S. funding are banned from expanding their capacity in the Asian country. On the same day, Representative Mike Gallagher said that Congress would scrutinize the operations of U.S. companies in China and potentially conduct hearings with them. Bloomberg proposed that 9 out of 10 of Apple's top suppliers potentially plan large-scale transfers to other countries like India. But it won't be a fast process, with Bloomberg Intelligence expecting 8 years to move just 10% of Apple's capacity away from China. Yoshinaga believes 90% of Chinese tech firms have been considering the same. He said, "It's the brand company's decisions." American businesses in China have become increasingly pessimistic about the world's second-largest economy, amid concerns about the economy and tension between Washington and Beijing. Reuters cited the American Chamber of Commerce in China, reporting that for the first time in 25 years of AmCham's China Business Survey, U.S. companies in China do not see the country as in the top 3 investment priorities. AmCham China chairman Colm Rafferty highlighted major challenges its members faced in 2022. He said, "Last year was particularly challenging for our member companies, as they dealt with China's economic slowdown, COVID control measures, and ongoing efforts to ensure compliance with various new US and China-related regulations. Companies' outlooks in China were more negative than last year, as only some 45% of the 319 responded firms ranked China as their top 3 investment priority, a significant fall from 60% from last year. In addition, 45% said China's investment environment is deteriorating, down sharply from 14% in the previous survey, and the highest level in the last 5 years. According to the survey, most members report that they are revising their investment plans for China, opting to make no additional investment or even to decrease investment overall. It noted that uncertainty around China's policy environment, the expectation of slower economic growth in China, and overall uncertainty in the US-China economic relationship were cited by members as the top reasons for decreasing investment. 66% of respondents said increasing tension between the US and China remains the top business challenge, while 65% said they were unsure or uncertain that the Chinese regime would further open to foreign investment. The survey showed some 46% of respondents think US-China relations will continue to worsen in 2023, up from 24% the previous year. After the Lunar New Year, sea freight rates in China are constantly falling. RFA reported that Shanghai Shipping Exchange on February 24th said that sea freight rates continued to decrease for the 14th consecutive month. The port of Shanghai, or Guangdong, has shown many empty containers since the second half of last year, causing too few available yards for containers. At the Yantian port, Shenzhen, the empty container toll could reach a 29-year record since this port started its life. The same situation is taking place at Nansha and Shekou ports. A captain with 20 years of experience in the shipping industry told RFA that the Chinese Communist Party, or CCP's draconian anti-pandemic policy dealt a fatal blow to the shipping industry. The captain revealed that at the peak, his ship earned $50 per ton of goods for exports from Shanghai port to Singapore, but the price has dropped to only $9 per ton. He said that due to the impact of the zero-COVID policy, in just 3 years, the entire shipping industry in China has gone from earth to heaven, and then on a roller coaster ride to hell, according to RFA. RFA added that after the financial crisis in 3 key economic regions, including Shanghai, Zhejiang, and Guangdong, saving the economy has become the most pressing issue for CCP officials. China's provinces and cities are now under pressure to reverse a severe economic downturn, but so far the results are similar.